Hello, I'm Mike Hetman. Welcome to another edition of CMS Forex News. Today is Wednesday, December 5th, 2007. Let's start in the UK, as today's economic data was a key driver to market movements during this session. British consumer confidence is 12 points lower according to a report released overnight. It said, uncertainty about credit crunch together with rising oil and food prices are affecting feelings about jobs and the future economic situation. The Halifax House Price Index declined for the third straight month. Prices in November fell 1.1%, reinforcing opinions that the UK housing sector is cooling. Growth in the UK services sector slowed in November, though it still expanded as its reading of 51.9 was above the 50 expansion line. Lower consumer confidence, falling housing prices, and slowing activity in the services sector can weigh on the Bank of England decision tomorrow. The Bank of Canada cut rates yesterday in light of poor releases recently. The Fed has slashed 75 basis points since September. The Bank of England may follow suit, although the committee has not indicated such intention. The European Central Bank, which also decides on rates tomorrow, is expected to hold. The housing news and the implications on monetary policy were the catalysts to the pound's decline today. The pound-US dollar pair dropped 250 pips off its pre-data level, trading near 2.03 at 10:30 a.m. Eastern Standard Time. Against the yen, the pound also fell around 260 pips in hours following the housing data, settling near 224.70 around 1 p.m. New York time. The Aussie fell to the greenback after the Australian central bank held rates steady and said that credit market turmoil will act to contain inflation and slow global economic growth. The pair was down 180 pips for the week before it recovered in New York trading. In the Eurozone, retail sales in October had a larger than expected decline of 0.7%. Meanwhile, the final version of services activity in the Eurozone showed a bigger than expected increase for November. The figures for the zone's largest economy, Germany, showed service growth easing. Starting last evening, the euro fell to the greenback. The dollar's gains accelerated after it posted a batch of positive data helping to rally the U.S. stock market. First, a report showed that companies added 189,000 jobs in November, almost tripling forecasts. This indicator, which looks at payroll data, can be inconsistent with the official government employment report scheduled for release this Friday. Worker productivity in the U.S. accelerated, rising 6.3% at an annual rate. This increase in productivity caused labor costs to fall by the most in 4 years. The improved efficiency may help temper inflation as increased productivity can offset higher energy costs when setting prices. New orders for manufactured goods were up 0.5%, making it the fourth positive month out of the last 5. The services sector in the U.S. advanced at a slower pace in November as new orders decreased, while prices showed a surge in inflationary pressure. Taken all together, today's news was positive for the U.S. economy in the backdrop of increased recession talks. The U.S. stock market rallied and investors returned to carry trade and risk appetite. The U.S. dollar climbed around 100 pips against the yen by noon New York time, recovering Monday's and Tuesday's losses. The yen also fell against other high-yielders, except for the pound, which was pressured by negative British releases. Taking a look at some upcoming releases, overnight in Japan, we get orders for machinery and the leading index. The UK reveals industrial and manufacturing production, and Germany posts factory orders. Tomorrow morning, the Bank of England and the European Central Bank decide on rates. Canada will release IV PMI and building permits. The U.S. rounds off the day with weekly jobless claims data. Today's action saw some important price movements on the eve of a now important Bank of England rate decision. Join us tomorrow as we break down the market's reactions. Thank you for joining us. For CMS Forex, I'm Mike Hetman. Happy trading and good night.